Good morning, viewers, and welcome to the 26th episode of Your Money, Your Taxes. I'm Paresh Shah, CEO of Paresh Shah Financial Services, and with me here is Mr. Lalit Abichandani, CEO and owner of ABIC CPA Associate. Lalit ji is a practicing CPA with 25 years experience. He specializes in US taxation. He has been running a successful CPA firm in New York. He and his firm provides tax service and tax planning for businesses as well as individuals. In addition to the regular trading businesses, his firm services healthcare industry, IT industry, hospitality and entertainment industry. He has done hundreds of offshore voluntary disclosure and streamlined procedure cases and has become an expert in foreign bank account reporting and the US-India tax treaty. He's a CPA and tax advisor to businesses, professionals, Bollywood industry, and a lot of film personalities. His website is yourtaxadvisor.com. So first of all, welcome Lalit ji.
Thank you, Paresh Shah.
Okay. And Lalit ji, in the past we've discussed taxes for US residents, but I often come upon US citizens or green card holders who live abroad and are very confused about their taxes. So what are the requirements for filing for US citizens and green card holders who live abroad, like maybe say in India or in Dubai or any such other places, and only come here for vacation? Some of them have very little income in the US. Do they have to file taxes? Can you please help clarify this confusion?
Paresh Ji, United States has a very unique law. Once you are a citizen or a green card holder, no matter where you live or how many months you live within United States or away from it, you are a US resident for tax purposes. Having said that, United States wants you to report your worldwide income. So once you are a green card holder or a citizen, no matter where you live, you have to report your combined income of the country where you live in, as well as the income that you may have generated from US. Now this rule is also applicable for people who are US residents, meaning people who have lived here for 183 days in the last 3 years. The calculation of 183 days is a very convoluted calculation, but for general purposes, if you have lived here for 183 days in last 3 years, the rule also applies to you, and you are supposed to report your worldwide income and file the US taxes as long as you have your income is more than the minimum requirement, which changes from year to year, but it's roughly about, for single person it's about 10,000, and for married filing joint it's about 20,000.
Okay, so that's interesting. So if they are US citizens living overseas, they have to pay taxes. But what I also find is people who live in the country in which they work, that also imposes taxes. Say for example, if they're living in India, their income is in India, so they might be paying some taxes on their income in India, and then they have to pay taxes again in the US. So that's double taxation. Is that correct?
Paresh Ji, even though it seems that way, it is actually double reporting. There are ways to avoid double taxation. IRS gives you several exclusions as well as foreign tax credit so that you don't end up paying double taxation. So there are ways to avoid that, even though you have to report a combined income, but you are allowed a foreign earned income exclusion, for example. So your first $101,000 is excluded from income. In addition to that, you have housing exclusion. Also, if you are filing taxes in overseas countries and you have paid taxes over there, the government allows you foreign tax credit. So if you add up all of that, there are ways that you can reduce your tax liability that you have arrived in US. So it's, for most part, you can eliminate the double taxation in this case.
Okay, but this is sorry Lalitji, but there were a lot of technical terms in what you just said, and one of them was, what I heard was correct me if I'm making a mistake here, foreign earned income exclusion?
Yes.
Yes. So can you explain a little more to our viewers about that? Yeah.
So Paresh, foreign earned income exclusion is basically when you live overseas and you have earned wages, or if you are self-employed, you are in your own business and you have made money from this self-employment. So this self-employment or your salary or your wages is excluded to the extent of $101,000. That is, this figure is for 2016, and it changes from year to year marginally. But there are strict requirements for that. You must maintain a household in a foreign country, and you must live in that foreign soil for at least 330 days out of 365 days. And if you are coming to US, your stay in US has to be less than 31 days. So that is a substantial presence test. In addition to that, there is another test known as bona fide residence test, and this is within last 12 months. If you have not come to United States for less than 31 days, if you have not lived here for more than 31 days and you have lived for 330 days overseas, then you can avail of this exclusion, which is $101,300 for year 2016. And like I said, it keeps changing marginally from year to year.
Well, that's great. That's a good exclusion for them to have a good benefit. But at the same time, from what I heard, there are a lot of numbers and a lot of number of dates and days which have to be calculated and maintained. I think that the people need to be very particular about how they're doing things so that they can avail of all the benefits.
Paresh, IRS does not make it easy. There always have to be strict requirements.
Right. So whenever I read the word exclusion, I'm sure they're always trying to make it a little harder than usual. One of the other things that you mentioned first, an advantage which they can take is housing exclusion. Can you talk a little more about that? What is housing exclusion and how does that apply?
So Paresh, in addition to the foreign earned income exclusion, the government also allows you a normal 30% in addition to the foreign earned income exclusion. So 30% of 101,000. So approximately $30,000 additional exclusion for your housing cost in overseas country. So this could be your rent, your utilities, or if you are paying interest on the mortgage, you can exclude that. Not only that, if you live in a very high cost cities like London or Tokyo or Paris, the government knows that your expenses may be even higher than that. So the IRS publishes a list of these cities, and they give you a little bit more than $30,000 for those cities as well.
Okay, wow, that's great. But in US, we normally pay Social Security on our earned income. So is all this income subject to that as well?
Paresh, Social Security technically is not a tax. It's the fee that the government charges you that goes into your retirement account. So as far as taxes are concerned, you have exclusion. As far as Social Security is concerned, the government wants you to pay unless you are paying Social Security in the country where you live. There are some foreign European countries where they have their own Social Security, and in IRS has Social Security agreements with those countries. As long as you have a certificate of coverage from those countries, you can exclude Social Security, but otherwise you are liable to pay Social Security on the earned income no matter where you have earned, whether you have earned here in US or overseas.
So, I'm just going to be on this Social Security thing for one more second, before we progress further, because it's always interesting, So if let's say there's a US citizen and he has earned money, he's now moved overseas, all the 330-day requirements and everything are there, and he takes advantage of this foreign earned income exclusion, but he's paying Social Security, so the number of years of contribution to Social Security and then that eventual benefit that he gets from Social Security at retirement, those things don't change, right?
They will not change as long as you maintain the citizenship of this country,
right?
And you reach a retirement age and you have qualified into the Social Security, meaning you have fulfilled the requirement of the number of years payment into that, you will then be qualified.
Right. Okay. That's good to know that that benefit is kind of maintained.
Yes.
But now we come to state. So what about state income taxes? How is that to be paid? And what are they liable to? They're not residing in any state. So what do they put their residence at, or what state taxes do they have to pay?
Paresh ji, again we have to look at the rules and the details of a particular case, whether they have a domicile, whether they have lived here in this in any state for more than 30 days, number of days residency in a particular state is very vital in determining whether you are liable for state income tax or not. But generally, if you have lived 330 days or more overseas, you are really not liable to file any state income tax unless you have earned income from that state. So let's say if you have some income from New York State, from a company from New York State, then you will be liable to file the state income tax. But if your income is from overseas and you have lived overseas, then you really don't have to file state income tax.
Well, that's a benefit, but at the same time, our old rules, on which the entire tax framework is there, that if you earn money in a particular state in the 50 states, that state tax has to be paid. That is
Right.
still applicable.
Well, there are some states who do not have personal income tax.
Right.
But the states who do, they have that.
They have to collect it. So let's go to the next thing, which is an advantage to us who are US residents and US tax filers. That means if we have to file by April 15th for our personal 1040s, then we can get a 6-month extension and we can file by October 15th. So can you do the people who live overseas get the same benefits?
Paresh ji, one very simple benefit for everybody who is not here on April 15, which is the tax filing deadline. By default, if you are not in this country, you get automatic 2-month extension. So if you have been living overseas, on that particular day, you get automatic 2-month extension without even having to file the extension form. But if you need, so your deadline then gets extended to June 15th. But let's say if you are not able to file the tax return by June 15th, then you have to apply for additional extension, and yes, you will get additional 4 months of extension, and that will take you to the deadline of October 15th. So that's the final deadline, that by October 15th of the following year, you have to file the personal tax return then.
Okay. So then now coming to, I'm just recollecting some of the conversations we've had in the previous episode, and one of the things that we had discussed in the previous episode is this foreign bank account reporting. So tell us a little about how the people who are living overseas naturally will have bank accounts up there and may have assets which generate income. What about FBAR reporting as far as they are concerned? Do they need to do anything?
Paresh ji, the foreign bank account requirement is about the same as residents, meaning if you have a bank account or a brokerage account, or you own mutual funds or life insurance policies, or you have security fixed deposits in banks, then all of that, as long as it exceeds $10,000, is subject to foreign bank account reporting. So you have to file the FBAR report and also file the FATCA forms if your balances are over $75,000.
Right. Lalit, I do not have too much time today to complete more questions. I did need to, actually I was going to go into partners in foreign businesses and those kind of things. But the basic conversation from what I understand from what you're saying is that for those who are US citizens or permanent residents and are residing overseas and having a bulk of their income from there, they have a certain norms to follow. They do have to file in US, but they have to follow certain norms.
Right.
And also I understood that those norms are fairly complex. So viewers, as I said in my introduction, Lalit ji is an expert in FBAR and foreign bank reporting, and he takes care of US citizens who live overseas also. So if any of you all have any person who's in need for advice for that, please contact him. As you know, the rules are fairly complex and you do not want to miss out anything. You can send an email to him at Lalit CPA at yourtaxadvisor.com, or you can give him a call at his office. His website is yourtaxadvisor.com. Thank you very much, Lalitji.
Thank you, Pareshji. And I will just plug in one more thing in here. So even if you have not done for previous year, please contact us. We can not only do the current year, but also previous years. And if you have any issues, please give us a call or send us an email, and we will take care of your issues current year as well as prior years.
Thank you very much. And
Thank you, Paresh.
viewers, see you in 2 weeks.
Great.